Hello, investors and traders, and welcome to the weekly market report with the Market Guys. I'm AJ Monty. This is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And as I mention each and every week to our followers, I keep my lines on the chart so you can see how the forecast works out. And while I am not 100% right on my forecast each and every week, and I make sure that's known, because no one is 100% accurate. There is a very strong percentage of accuracy here that I'm tracking that's close to 90%. And I want to shout out to Michael Gordon, who made a comment in last week's report, more or less challenging some folks to go back and give the last 10 weekly market reports a score with regard to the win percentage. And while, again, no one is right 100% of the time, if you follow the charts and read the signals, you'll find that the technical signals are extremely accurate, especially during times of uncertainty or in times of high volatility. Because let's face it, a lot of times you can't go on the fundamentals, but the technicals, according to Dow theory, discount all the news. This is one of the tenets of Dow theory created by Charles Dow in the early 1900s, is that the news more or less is already embedded in the chart. So there really shouldn't be any surprises unless you come out with an earnings shock of some sort or an analyst downgrade. You can use the charts not just for forecasting, but you could use them for risk management. And again, as I zoom in here, you'll see that last week I said the Dow would most likely move up early in the week. Here we are Monday, it went up and then it proceeded to go down. Closing today very, very close to my target price. Yesterday we passed through the target price, which is the end of that line right there at 258.05, and that was a score there. Now what does that mean for next week? Well, if you look, you'll see today's candle is almost a bullish engulfing pattern. In fact, I think it is exactly that. You see that there's a bullish engulfing pattern right at the 20-period moving average, and there's still a gap above the market. Now next week I think we will go up. I don't believe we're going to go up right to fill that gap, but notice the angle that I'm dropping right here on this line. See this? I'm going out about 5 days, which will bring us to next week, and I'm mimicking the speed lines that we see here. And if you go back, you'll see that more or less the angle at which the market rallies is pretty consistent. So all I'm doing for next week is I'm duplicating that angle that we found here and those speed lines and this one back here. So if you do decide to take a long position, I would strongly encourage that you keep stops below these support levels, because if, in fact, the market does not go up to fill this gap, it will most likely, obviously, go down to test that support. And there's a gap fill support level down there. But next week, it looks good as the oscillators are starting to turn up. Now, if we look at the Russell 2000, this is a more broad-based index, mainly made up of small-cap stocks. You can see that I said we would most likely go down with the end of the line right there being my target. And bam, we hit that target precisely. And this green candle that we see here on the close of July 10th is very close to a bullish harami. Not quite a bullish engulfing pattern because we needed a higher close, and it's not really a small body green candle inside the red. It's a decent sized candle, but I think that will go up next week. Again, duplicating the angle from the week before last right here. I see the oscillators turning up. This CCI is hinging up. So again, that's looking bullish for the Russell 2000. Looking at the tech sector, QQQ, I did say we would most likely close with a new record high, the end of the line right there being my target. We far surpassed that. We blew away the target that I had and went on to set, again, record highs. But you have to be really careful on the Qs. Why? Because if you look at the tech sector as a whole, you'll notice that, again, backing up, we have a pretty extreme angle here that's more or less accelerating. You see back here from August, you see the angle back here? notice that nice steady upward trend. We have an accelerated upward trend. So the more accelerated, the more vertical that trend gets, the more risk we are assuming at that particular point, and the more of a defensive stance we have to take with our positions. So while I think the NASDAQ could go a little bit higher, I think towards the end of next week, we're going to start to see some profit taking. And again, another reason for that is we see a wide divergence from this moving average right there. The market does not like to stay that far above that moving average. We do have a drop in volume today. Even though it was a record high, we see a drop in that volume with the stochastics down here showing extremely overbought, while at the same time, interestingly enough, the CCI is going down. You don't see that too often. Stochastics going up, CCI going down. The CCI is very close to approaching the sell signal. If the CCI crosses down below that red line, that will be a sell signal that will most likely trigger some profit taking in the tech sector. So be careful of that. All right, if we look at the spiders, ticker symbol SPY, and then I'm going to hop to the VIX. Yesterday we came close to hitting my target, bounced off of this 20-period moving average. You see this blue line right there? Bounced off the 20-period moving average and closed today with a bullish engulfing pattern. See that? Going to erase all these lines and redraw where I think we could go next week in the spiders. This will most likely fill. This gap is very, very close to filling already, but I think we're going to surpass that gap and go back, test the highs here back in the first week of June. So I'm going to erase that line. We know that that's going to be a target, but I'm going to draw my forecast a little bit higher than that, looking just like that. Keep an eye on the stochastics, because if it goes up and starts to turn down, you might want to trail your stops up. If the CCI goes a little bit higher, like I think it will, and then starts to turn down, again, another reason why you should either take some profits off the table or trail your stops. And one of the reasons why I think the spiders are going to go higher with the rest of the market is because of the VIX. Look at this. I went a little bit further in my forecast last week. Not only did I put this diagonal line in place saying that the VIX would go higher, but I said, it's hard to see this, I'll have to magnify that. See this red line? I also forecasted that the stochastics would go higher, and it followed that line precisely, as well as the CCI. So the CCI would most likely go up and cross with a buy signal. And as you can see right there, it did the same thing. Now, we didn't hit the target on the VIX, but look what's happening today. That is a bearish engulfing pattern on the VIX. The VIX is inversely related to the S&P, so I think the VIX could move lower next week to test this support level, at which time we could see a bounce, but I think it's a little bit too premature to forecast that bounce, because if the VIX drops and we start to scream back up towards record highs in the general markets, then you could see a renewed sense of confidence coming in, even in the face of this pandemic as it continues to unfold throughout the news channels. I think investors are shrugging this off, actually, which is good and bad. I like the confidence, but you have to be really careful, because that VIX is also known as a fear index. If the VIX starts creeping up and breaking out of these resistance areas, we could see some more fear creeping into the market, which obviously is going to put pressure on the major indices at that particular point. So please do everyone a favor, go to our channel, click the like button, go ahead, subscribe, and you will be notified when the next alert comes out. Right now, we're keeping this report free. I'd like to keep it free indefinitely, but that's all going to depend on the number of people that we have. If this is really helping a lot of folks with their trading, please put some comments in there to let me know that it is helping you. And remember, the more people that follow the technical charts, the more accurate the signals become. Like I said 1 or 2 reports ago, it's just like an analyst putting a price target on a stock. What's going to happen? If a price target is raised by a particular analyst, chances are the stock is going to go up. and approach that price target. So if we're drawing lines on the charts forecasting future price action based on the signals, then we're going to have more people reacting to those signals. And as a whole, as a community of traders, we all make more money. It just makes more sense as we move in and migrate as groups of traders moving money in and out of the market. So hopefully you've enjoyed this report. Have a great weekend, and we'll talk to you next week. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.